Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Wednesday, June 10th. Before we get to the show, today at 12 p.m. Pacific, 3 p.m. Eastern, I'm going to be sitting down with the reporters in our newsroom who have been leading the Information SpaceX coverage. Theo Waite, Valita Pao, and Cory Weinberg. The event and the webinar is exclusive to subscribers. You can RSVP right now at theinformation.com/events. Look forward to seeing you there. Today on the show, Anthropic has a new version of a Mythos-class model called Claude Fable. We'll break down how this model is different from the one initially released for testing. We also have exclusive reporting on how OpenAI is in talks to lease a 10-gigawatt data center in Ohio. That is part of a deal that could include financial backing from Nvidia. We'll then take a closer look at how the Nasdaq landed SpaceX's Mega-IPO, and we'll close out the show with a conversation with Nebius on how it is looking ahead to Nvidia's Vera Rubin rollout. It's going to be a great show, so let's get right on into it. Anthropic's Mythos announcement a few weeks ago sparked a number of concerns about how dangerous AI models could inevitably become. Yesterday, the company announced the release to the public of an affiliated model, Claude Fable 5, with new safeguards. The Information's AI reporter, Stephanie Palazzolo, has been following the entire Mythos rollout, and I want to bring her on to share with us what the situation is on the ground. Stephanie, welcome back to the show. Great to have you here.
Thanks. Great to be here.
Okay, so there was all this hoopla about how dangerous Mythos is. They said, we're only releasing it to a couple people. Then they said, Project Glasswing, we'll add another 150 people. Now they say we've got this model out there. What is Claude Fable 5 and how dangerous is it?
Yeah, so Claude Fable 5 is, I think, to your point, I guess, neutered version of the Mythos model. So, as you mentioned, there has been a lot of talk leading up to this about how dangerous the model is for cybersecurity. It was able to find, uh, ways to hack software out there that software that's been around for decades. But with the release of the model yesterday, Claude Fable 5, Anthropic actually made it so that it's unable to answer questions related to cybersecurity. And instead, those types of questions are routed to a weaker model. So that was Anthropic's kind of workaround, for some of the dangers and fears that people had around when it would be released, that there might be a giant increase in hacks, for instance.
Right. Okay. So Anthropic says that it's fully safe. I imagine this is the type of thing that, the company can say whatever it wants, and we might see in practice how that plays out over time. Insofar as how good the model is, I trust you've been talking to people who might have been using it. We're going to speak with Replit shortly about their experience, but what is the consensus about the effectiveness of the model?
Yeah, so early testers and developers I spoke with said that honestly, the model is really, really good. I think there was maybe some fears leading up to this that this could be another example of kind of over promising and under delivering. But so far, people are very impressed with the model and say that, while it might be hard to tell a difference between Fable and past models when it comes to simpler tasks or questions you might ask it, like, Google search-esque questions you ask ChatGPT or Claude, where it really stands out and does really well is with these super complex, long running tasks. I spoke with developers who said that they were able to build entire video games with just a single prompt and, very minimal kind of feedback and fixes. There have been examples floating around about how the model was able to migrate, millions of lines of code within a couple hours, something that might have taken a team of human engineers, days to do. And so, yeah, it does seem like, I think actually one interesting thing that a lot of people mentioned is the fact that the Claude Fable model seems to have really good taste. So I spoke with a developer who wanted to, take some books that he was interested in and basically create like a live podcast that would read the books to him. And so he just told the model, like, hey, can you make kind of like a podcast experience so I can listen to these books while I'm walking to work? And then, Fable actually made its own choices around, I want to add features that let you listen to the podcast at 1 or 1.5 or 2 times speed. I want to add something that will highlight the words as you're listening to it. that would let you like follow along while you're hearing the podcast. So all these sorts of things that, this developer never explicitly told the model, but the model kind of has like good, engineering taste basically, or design taste. And it was able to make those choices by itself without any prompting from the developer.
So is this gonna be the go-to model now, or is every other model obsolete, or what's the situation?
Not necessarily. As we actually were able to scoop a couple hours before the launch, Fable is not a cheap model. It's actually 2 times more expensive than, prior to this, Anthropic's most expensive Opus model. And so that is definitely a deterrent for developers in terms of, only really wanting to use Fable for their most important or complex tasks. And, again, like a lot of developers I talked to did say that you can use GPT 5.5 and Opus 4.8 for, a lot of tasks that are maybe more simple. And so that I think will make it so that, it's not like people are going to only use this new Fable model for every single type of task, but, it's kind of something where you save it maybe for your hardest problems that you want to work on.
But you said in your column today that the model is token efficient. What do you mean by that?
Yeah. So again, when you think about the overall cost of a model, you have to kind of take into consideration two things, which is the cost per token and then the number of tokens that the model is, uh, you know, processing or outputting. So those are kind of the two parts of the formula. So with Fable, even though the cost per token has gone up quite a bit, developers are telling me that it's more efficient at producing fewer tokens or having to process fewer tokens, which brings the cost down. And so part of that is like because the model is so much smarter, you can imagine that when you give it a engineering task, it doesn't make as many mistakes. It doesn't need to go through as much trial and error, which produces a lot of extra tokens. And so if it's not making as many mistakes, it's producing fewer tokens that can actually drive the cost down, making it less than 2 times as expensive as using the Opus model, for instance.
Well, and that strikes me as a pretty significant innovation, right? Because price per token, that is something that the company ultimately sets and they can control that. The number of tokens that are used, that is a direct reflection of how good the engineering is behind the model. And that's not something that they can set. I mean, that's literally a reflection of how good it is. And so maybe that's promising in terms of where the models are headed. I want to go back to where we started this discussion, though, Stephanie. So, when Anthropic initially came out with Mythos, they made all this noise about how dangerous it is. The developers that you're talking to, do they feel like those warnings were warranted? I mean, is this the type of model that they could see having some dangerous implications if those safeguards were not put in place?
Again, it is hard to tell just because, you're very limited in how much you can test Fable's like cybersecurity capabilities.
Right.
My colleagues and I have talked to people that had early access to the kind of full blown Mythos model and did say that it was very capable in this area and something that they were concerned about. But again, it's hard to tell, and I think Anthropic has made some very interesting choices in terms of adding these safeguards. Another area that they added safeguards in is actually preventing the model from being used for AI development. And so this has been like a common theme where you see AI labs basically using data from Anthropic or OpenAI models to improve their own models. And so essentially with this latest example, Anthropic added in these safeguards that prevent users from being able to do that. So that's something that, is an interesting choice that actually, I think Anthropic is the first company to do such a thing. And so it's making it harder for people to kind of really see the full capabilities of the model when it comes to like using AI to do AI research or for cyber, for instance.
Right. Does OpenAI have an answer to this model yet?
So from what I'm hearing, it sounds like they do. I, talked to a tester who tests, gets early access to OpenAI and Anthropic models. And when I asked them about this, they said, Fable's a really great model, but it's not the most advanced model that I'm currently testing. And, strongly implied that the model they were talking about is an OpenAI one that, we'll have to wait and see. Again, this is just one person's opinion, but I think that's a positive sign that OpenAI could have something up its sleeve and perhaps an answer to Fable in the upcoming weeks and months.
Okay, and last question, Stephanie. The thing that we love to talk about the most here, the name Fable 5. Was there Fable 4, 3, 2, what? Like, do we know anything? Is this really the fifth iteration that we just missed the first
Yeah.
four?
Yeah, no, the naming conventions are always super fun to kind of figure out. I think in this case, Anthropic has done this very interesting kind of I guess, like, poetry-related naming conventions, so obviously this
Yeah.
model is haiku, and then there's sonnet, there's opus, and so I think Fable is meant to kind of designate that this is, like, a whole new kind of level of model that we've never seen before,
And I
and
guess the 5 is maybe the 4.7 was
yeah,
the last one.
it
So,
yeah, but
okay.
it's kind of funny. It's at this point, people pay attention to, like, okay, are you gonna call it 4.9 or are you gonna call it 5? Like, and if it's 5, that means that it's gonna be so much better. And so it's just kind of funny, I think, seeing people read into all the different names and things like that. I'm sure Anthropic's marketing department is thinking a lot about this and getting really deep with these naming with these names for the models.
Well, it's less scary than Mythos, so that certainly
True.
fits that. Stephanie, I want to thank you for coming on the show. That is Stephanie Palazzolo, our AI reporter here at The Information. For more coverage on Anthropic's new Fable model and how developers are actually feeling about it on the ground, I want to bring on Michele Catasta, president and head of AI at Replit, for his thoughts on it all. Michele, welcome back to the show. It's great to have you here.
Thank you. Good morning. Thanks for having me.
Okay, so you have had early access to Fable. Your team has been playing with it. What is your initial reaction?
It's been pretty exceptional across the board. And in a sense, it gave us the feeling that we're in front of a new class of models. And I heard you talking with Stephanie right before about the naming convention. It doesn't make sense to me that we come up with a brand new name because the performance, we're experiencing both in product, but especially our developers at Replit, we're in front of a new class of the productivity you can obtain as a developer, using frontier models.
Hmm. Tell me about how you measure the performance of these models for your own purposes at your company and how you stack them up against each other.
So last time we talked about the fact that we are about to launch ByteBench, our end-to-end vibe coding benchmark. And what Fable has accomplished in certain classes of the bench that we created is basically almost saturated already. So there's been like a huge leap. And this is happening especially for 0 to 1 tasks. And I read also the comments from the community that very much agree with this direction. So you can give a very detailed, long prompt of something you want to create from the ground up. And Fable has accomplished a level of autonomy as such that it can really plan in depth what should be done and then execute tasks on a long horizon execution for creating an app 0 to 1. So on that side, we're seeing a lower class of performance. I would say it still remains to be seen how powerful it would be in the context of our own product. So for that reason, we probably launch it in a slightly different way compared to a lot of other AI products out there. So we have a new high effort mode in Replit, and we retain the right of deciding why it makes sense to escalate all the way to Fable versus where we can just use higher level of reasoning with the smaller models that Anthropic offers. And we're trying to do that because I don't want to have like regrettable tokens used by Replit users. I think we need to think of what's the intrinsic value of tokens rather than just the cost per se. So even though, say, it's exceptional on 0 to 1, it might be the case for a lot of the apps that people create on Replit, running on a less powerful model accomplishes 95% of the results with a much lower price point. So with time, I think we're going to understand exactly where Fable excels for non-technical users and when it's getting almost overkill, because that's how hard this technology has become at this point.
Right. Are there areas that you've seen it doesn't excel or ways in which the model has fallen short of your expectations in the short time that you've used it?
I wouldn't say so. I mean, across the board, we're seeing better performance, higher efficiency. It's a much more intentional model. So it knows
And
exactly
this
what
is
to do.
for all I mean, this is for coding, this is for just, chat interactions, this is for, agentic features, like, what use cases have you used it for so far?
And I would say 90+% of our efforts in terms of discovery and research on new models goes on coding. We also run some pure research workloads, to understand of how we can push it. For instance, we have an internal benchmark that generates a scientific paper based on some of the research that we do on Replit. And by far, this has been the model that goes from the initial idea, scanning through our code base, applying the research instead we have in mind, and run an entire scientific paper in the best possible way. It's a coherent paper. You can read through that and you believe it has been written by a PhD student.
Right, right. Now, I wonder, I don't think you guys were involved in Project Glasswing, although correct me if I'm wrong here at all. But
No.
I have been trying to assess or get an understanding from people how dangerous they really thought Mythos was, and the extent to which Fable will protect from those concerns that they raised. Based on your, again, limited experience with it, but just what you're seeing, I mean, do you get the sense that Mythos was truly quite dangerous? And are you confident in what you're seeing that Fable will uh, not, succumb to those threats, I guess?
Well, we're still not exposed to that risk, right? Because Mythos hasn't been open completely to the public like Fable. I think that it's hard post facto to assess if the strategy was correct or not. At the same time, I do feel that being cautious in this context never hurts. We're in front of a level of frontier models that it's hard to distinguish at this point if a PR has been written by a very experienced engineer or by a powerful AI model. So it makes sense that we have this technology, as in Fable, in the hands of everyone who writes code. I think we can take our sweet time to figure out what is the best possible rollout for the security features. It takes a lot of time, to really isolate all the impact that all the different security advisories will generate on the market. I do think though that something is changing as we speak, because if you go and check like how many bugs Firefox has been, addressing the last couple of months, there are a lot of statistics from open source models that show from open source project that show how many security issues have been solved in the last couple of months. So I do think it makes sense to be cautious. Maybe this is not an existential risk what we're going through, but if I prefer, to be on the side of cautious than on the side of just rushing it. And overall, I think I agree with the strategy from Anthropic to take it easy. And I believe the rest of the industry is doing exactly the same. Like
Right.
OpenAI has also a very similar program. So I think everyone is aligned that it does make sense to take time.
And you touched on this a little bit earlier, but I do want to get to your observations on the cost of using the model. We had Stephanie on earlier, and she was talking about, again, price per token, and then the number of tokens that the model actually uses. Anthropic is calling this a very token efficient model. Does that ring true based on what you're seeing initially?
Yeah, so we launched literally less than 24 hours ago, and we have been already analyzing all the traces and the usage from Replit users. It does use double-digit percent fewer input tokens, fewer output tokens. It runs more parallel tool calls. It runs overall shorter traces of the agent. So there is higher efficiency in any possible way. It remains to be seen dollar to dollar what is the ratio between accomplishing the same task, say with Opus versus Fable 5. That being said, the price point, of course, keeps going higher. So it kind of defeats the narrative that we were talking about a year ago, where we claimed that the cost of intelligence would have dropped to zero. It is not the case, and I can understand why. These are giant models that require a lot of research and computational power to play it. I don't think, though, that the impact that this will have to the user will be literally like a 2x in terms of additional cost. It's probably going to be somewhere in between. Say it would be like a 50% additional cost on top of it. And it will be up to AI products to decide what is the best product experience you can give to your users such that they never regret using more powerful tokens. And we do this on Rapid with high effort. Other companies are betting more on model routers. The entire industry is moving in that direction because using Fable to do literally everything would be, by definition, very much overkill and way too expensive.
Right. Great. Well, Michele, I want to thank you for coming on. That is Michele Catasta, President and Head of AI at Replit. here on TITV. OpenAI is making another big effort to secure data center capacity, and my colleague Anissa Gardizy, our cloud and compute reporter, published exclusive reporting on a major deal the company is closing in on. I want to bring on Anissa to share with us more about what she learned. Anissa, welcome back to the show. What do we know about this new data center deal?
OpenAI is in late stage negotiations on being, leasing a 10 gigawatt data center in Ohio. Now, it's very important to know that this data center hasn't been built yet, so it's still an early stage project. But OpenAI is in talks to bid on the site, and if it were to win the bid and this data center were to be built out, it would 100% be OpenAI's largest AI data center facility. This location is in southern Ohio, and it's near a new power plant that's being built. That's what we reported yesterday.
So let's unpack it. So 10 gigawatts, that's Stargate, right? I mean, Stargate was the announcement said that it was going to be a joint effort, right? It was Masayoshi Son was there, Trump was there, Larry Ellison was there, Sam Altman was there. That was going to be a big joint effort. This is OpenAI saying we'll just do it on our own and we'll lease it independently.
Essentially, I would say the original Stargate that you just mentioned with Oracle and SoftBank has kind of still gone on. So OpenAI is doing around 6 gigawatts with Oracle under that 10 gigawatt umbrella, and then they've counted another small project with SoftBank Energy, getting them kind of close to that 10 gigawatts. So this is a completely net new 10 gigawatts. And yeah, you're right.
In addition to that.
In
Okay.
addition, and in this case, it is OpenAI leasing a data center, which, if they actually end up going through with it, will be as close as they've come so far to sort of controlling more of their own infrastructure. So yeah, they essentially are this is Stargate maybe 2.0.
Okay. And so now in your story, you outline that this effort, I mean, it's a $500 billion effort to operate this much compute or construct it. Help us understand what that figure refers to. That's not the amount that OpenAI will be paying itself, right?
Yeah, there are really big numbers here. So I can sort of walk you through what this all means. So 500 billion is the number on the total cost of building out 10 gigawatts of data center capacity based on today's prices. And so OpenAI isn't going to be building the data center. That is all on SoftBank Energy. And we've reported that they're going to have to potentially, borrow project financing in order to build out this 10 gigawatt site for OpenAI. Now, on the OpenAI side, they're going to be on this 20-year lease if the deal goes through. So we estimate that would be in the tens of billions of dollars over the 20-year period just to lease this data center capacity. And then the other thing that OpenAI would be on hook for is actually the largest line item here, which is the chips that go inside of the data center. And so based on that 500 billion number, the amount of hardware and other types of chip gear that you might have to buy, like networking, that would be around $350 billion. And so these are just astronomical figures, and we expect that if OpenAI progressed to that stage, that they would likely seek a financing partner to help them, fill this data center with chips, and it'll obviously get built out in phases as well.
Right. And so now this is where Nvidia comes into the picture, right? Because you reported that Nvidia is putting itself on the line to be a financial backstop of sorts for this leasing arrangement. So what would Nvidia conceivably be on the hook for? When would they need to give money?
Yeah, so the NVIDIA angle here is that they are in talks to be what is known in the data center community as like a financial backstop. And so it doesn't, I don't think, a lot of these in backstops happen because the party trying to access capacity, in this case, OpenAI, is not investment grade. So, for example, it'd be very hard for SoftBank Energy to get people to lend them money if they say that their tenant is OpenAI. As much as people might like OpenAI and think that this data center is going to be successful, lenders don't really care. They just care about whether the tenant is investment grade. So what NVIDIA,
Meaning investment grade, meaning it's if it's a public company where bonds can sort of be freely traded.
yes, and has a credit rating, and that's something that OpenAI as a private company doesn't have. Anthropic
Right.
doesn't have it. They're in the same boat. And so what NVIDIA is proposing to do is say, you know what, if we will backstop OpenAI's lease payments. And that is something that makes lenders feel a lot more comfortable in lending money for a project. So that's NVIDIA's role. And obviously the data center would be filled with NVIDIA chips. So this could potentially be, one of NVIDIA's largest data center sites as well for its chips.
Okay. And just to clarify one other detail here. You mentioned that the OpenAI's lease payments, we don't know the figure. It'll probably come to the tune of tens of billions of dollars. The 350 billion-ish dollars that it would take to secure the chips that you said, who would be paying that money? Would that be SoftBank Energy to putting the chips in the data centers?
No, as we understand the deal talks today, it would be OpenAI doing
Okay.
the chips. And so, yeah, the question is, or how are they going to be able to pay for that? And this is
Right.
definitely something that I think they're discussing, but is a little bit down the line in terms of when they actually have to figure that out. But one thing that could be plausible is that Nvidia does a vendor financing with OpenAI. Obviously, that'd be a very large vendor financing. But yeah, I wouldn't be surprised if maybe that's what we see later down the line. The first phase of the data center is expected to be done in 2028. So there's a little bit of time for OpenAI to figure out how to get that 350.
Right. Now, we should say SoftBank Energy, SB Energy, as you refer to them in the story, they are the lead developer on this Ohio plot of land. Sounds like SoftBank is, of course, a big investor in OpenAI. Do we have any sense for how that relationship maybe could make things easier for OpenAI? Like, are these going to be, I don't know, favorable rates on the lease, or maybe
Interesting. Yeah, it's an
I don't
interesting.
know. I don't know the answer. I'm just thinking, like everything is so interconnected here, right?
Yeah, so this here what we learned about this specific site is that we haven't even talked about the connection to the Department of Energy and the Department of Commerce and how the US government is kind of playing a role in getting this data center off the ground. And so this new power plant that's going to be built for the data center is being built on Department of Energy land. And one thing that the Department of Energy asked SoftBank Energy was to run a fair process to find bidders for the data center. And so as far as we know, multiple companies looked at this site, and if OpenAI is the one in advanced discussions, maybe they offered a higher price than other people. We don't exactly know. But I think it was from what I heard, the government was interested in not just saying, because SoftBank Energy, which has a relation to SoftBank, is doing the site, it's 100% going to go to OpenAI.
Right. Well, I mean, and that's a key aspect to this too, because in this world of circular financing, you could imagine a scenario where if the government wasn't involved, maybe they make things easier. But that's a great point. Now, I just want to ask you about the capacity number here, 10 gigawatts. I mean, we know that OpenAI is obviously a fast growing company. 10 gigawatts is a lot of capacity. Did you get any understanding from people around? Uh, does OpenAI need all of this today, or is this capacity that they're building for the future? Just put the 10 gigawatts into context for us.
This is definitely future capacity for OpenAI. The first phase of this project in Ohio isn't set to be ready until the 2028 timeframe. So in today's world, the companies might view that as near-term compute, but the full 10 gigawatts that we're talking about here is likely many years away. So this is definitely a bet on OpenAI's part that they need to get the ball rolling on a large site like this early, because if it comes to be 2032 and they don't have enough compute, then they at least have this data center where they have a 20-year lease and a lot of flexibility around compute. And then just to put the 10 gigawatts into context, this is the largest data center under development in the US. And, I think that also means that we should take it with a dose of skepticism, because a lot of OpenAI's big compute announcements don't pan out. So even though they're talking about this and even might sign the lease, we'll definitely have to see, do lenders buy in, and is it able to reach that 10 gigawatts, or maybe it ends up somewhere around 4 or 5, which is still so large. But there's a lot up in the air here, even though they are nearing this initial deal.
Great. Well, Anissa, I want to thank you for coming on. That is Anissa Gardizy, our cloud and compute reporter here at The Information. SpaceX's IPO will have ripple effects on the broader stock market, and it also has implications for the companies who are in the business of operating the stock market. To that end, it is noteworthy that SpaceX picked the Nasdaq over the New York Stock Exchange to list its shares. My colleague Cory Weinberg published an in-depth look at changes Nasdaq has been making within its own business to help secure listings like these. I want to bring him on to talk more all about it. Cory, welcome back to the show. It's great to have you here.
Hey, Akash.
Cory, why did SpaceX pick the Nasdaq over the New York Stock Exchange?
Well, Nasdaq happens to be the only stock exchange that has basically the power to drive billions of dollars worth of stock in SpaceX's direction. It's the only stock exchange that is directly tied to an index that controls a ton of passive money. And so while we don't know exactly the decision-making process behind SpaceX and why they chose NASDAQ, they had a very strong incentive to do so if they want their stock to move higher.
Okay. We do know, though, that the Nasdaq has been making some changes, though, to how it includes companies in its indexes, right? Which could have had an impact here.
Yeah, NASDAQ was the most aggressive and among the first of these wave of index providers to essentially say, hey, we're going to make some changes to which companies we allow in the indices to make way for these mega IPOs that are in the pipeline this year, the first of which being SpaceX. So a bunch of index providers, including sort of MSCI, Russell, CRISP, which is owned by Morningstar, and Nasdaq, all made changes to essentially make it a little bit easier for companies like these mega caps that are going public to enter the indexes faster than they would have otherwise. Usually there's a seasoning period. Usually there's some other requirements that companies need to have before they can be automatically bought by funds that track the index. Nasdaq was among the most aggressive. It had this unique feature where it will weight SpaceX in the index at a disproportionate amount compared to how many shares are actually trading. So that should give it a sort of disproportionate weight in its index, and it also happens to be the one where SpaceX is actually listing its stock.
And what is the reason that they give you, or what's the public reason that they say they are making these changes? Does it have to do with companies staying private longer, or what's the rationale on their end?
That's one of the That's one of the stated reasons. Yeah, I mean, and they have a point. Look, I mean, the index providers are responding to an environment where you have, for the first time, companies coming public with trillion-dollar plus market caps. Like we've never seen this before. The structural changes that they're talking about in terms of, hey, we need to make some adjustments to how we usually keep sort of include companies in the index. That's real, for sure. Critics would say, look, that doesn't change the fact that a lot of these companies are still incredibly risky bets for investors to make, that they're losing tons of money, that their future prospects have some hair on them, and that by putting sort of them in the index faster, you are essentially putting investors at risk.
And this decision to accelerate how fast SpaceX could be included in the indexes, I mean, that decision in and of itself, you had some interesting reporting on how people are feeling about that. It's not everyone is agreed that it's a good thing, right?
Yeah, I mean, it's a controversial decision. We essentially worked with a firm called Peak Metrics to measure sentiment around sort of the online conversation surrounding the SpaceX IPO. And one of the most negative themes was this notion that sort of the index providers are forcing SpaceX stock down investors' throats, essentially. That was an insanely negative theme online, on Reddit, on X itself. And then folks that we talked to in the index industry, including people who have actually worked with companies to essentially pick an exchange, have said, like, this seems like a bridge too far. This seems like the indexes, especially Nasdaq, because they want to win the listing, are making some big changes to please one or a handful of companies, and that threatens the market, sort of structure overall.
Hmm. Now, I understood this idea that you just explained, that there are funds that track the Nasdaq 100 index, and so if SpaceX is included in the Nasdaq 100, then the funds that track that will have to purchase stock to sort of balance things accordingly, and that will obviously be good news for SpaceX because it means that they will have more buyers of their shares. The other part in the story I want to ask you about, though, is you mentioned that Adina Friedman, the CEO of Nasdaq, said essentially the Nasdaq has become a 3% to a 4% owner of companies that sit in the Nasdaq 100. How is it that Nasdaq has become such a big shareholder, I guess, in these companies?
They are literally a shareholder. Essentially, what Adina Friedman, who's this longtime CEO of Nasdaq, is referring to there is she's essentially referencing, I think, sort of the influence that Nasdaq wields over the funds that track the index.
Got it. So by proxy, I
Th-
mean, based on what they do, those funds own that much.
Correct. Nasdaq is not an owner,
Right.
point
Okay.
blank.
Okay.
So let's just be really clear there. But they are, indirectly, or I mean, they are directly influential on sort of how those funds actually, go, because the weight that Nasdaq determines will determine where, really influential ETFs like Invesco's QQQ series, sort of how they allocate funds. And that interview that Adina Friedman gave in March, which I found really striking, it was the first time I had seen sort of her or really any NASDAQ officials talk openly about the relationship between the index and the exchange. That essentially, as one person put it to me, this index is essentially a marketing weapon for Nasdaq to be able to win more listings business, especially large listings, which they have been doing recently.
Right. Now, the S&P 500 decided not to go the way of Nasdaq and accelerate this process of getting included in its index. W what did that tell us about this IPO, about the decision, about how the future could look? Will these 2 indexes take drastically different directions? Will they look different? I mean, what are the implications there?
I mean, yeah, they're gonna look pretty different, I think, especially if Nasdaq 100 has, if Anthropic and OpenAI decide to list there as well, um, you're gonna have a pretty stark difference in sort of how the Nasdaq 100 performs compared to the S&P 500. Um, like, these are going to be volatile stocks, and everyone has an opinion on them. Um, I'm sitting here today as, someone who's talking to people involved in the SpaceX IPO all the time. No one really knows how it's going to trade, right? Like this is a polarizing stock with a pretty low float. And if it's not in the S&P 500, and neither are OpenAI and Anthropic, you're going to see some pretty stark differences in performance there, for better or for worse. I think the S&P has historically been seen as a little bit more conservative. Obviously, they have a much broader base of funds that track them. Nasdaq 100 is heavily Invesco QQQ. So they have essentially they don't have one master to please, but they sort of are much more disproportionate to kind of one customer there. S&P is much broader, and S&P doesn't have an exchange business. They aren't trying to win the listing for these companies. They're kind of a broader data intelligence company that is, obviously have had its own history with trust and trying to ensure stability in markets. And they decided to go a much more conservative route than Nasdaq.
Right. Well, we can thank Elon for certainly muddying the waters here between all of these businesses and market dynamics. Cory, I want to thank you for coming on. That is Cory Weinberg, our senior reporter here at The Information. Our next segment is with our partner, Nebius. Nvidia says its Vera Rubin chips are in full production. Nebius will eventually deploy those chips in its data centers. I had the chance to talk with Nebius's chief revenue officer, Marc Boroditsky, while he was at Nebius's AI conference, Inflection. We spoke about Vera Rubin demand that he's seeing, lessons from the Blackwell rollout, and how CPUs are coming up in his conversations with customers. Here is that conversation. Marc, welcome back to the show. It's great to have you here.
Akash, it's a pleasure. I'm glad to be back.
So you are at Nebius's big event. You've got customers on the ground with you. You've got investors, analysts, everybody in the Nebius orbit. The topic that I want to start off today with is Vera Rubin. Okay, they are the next family of NVIDIA chips. Everyone is looking ahead to see how much demand they get. You have a front seat to how much demand these chips are ultimately going to get. What are the big questions that your customers are asking you about that family of chips?
Well, first of all, they all want to get access. There's a desire to get their hands on them. People are asking about test racks. People want to start to take their existing models or their existing software and see what happens when they put it on Veras. Second of all, everybody wants to know, when can they actually start to get access to buy them. They're recognizing that the next evolution of whatever they're building, they're going to need to be prepared with Veras, and that means setting themselves up to, have the capital or necessary financing to be able to get that next set of chips and remain competitive, or take on the additional capacity they need to continue to build their business.
And so as they look ahead to the next family of chips, I mean, one question I've thought about is, as these chips get better, how much demand will there remain for the older generations of chips, the Blackwells, the Hopper family, the A100s? I mean, I imagine that the chips just need to hit a certain threshold, and then they are able to do, enough for customers. So are you getting inquiries saying, hey, we don't need the Vera Rubins. We're actually okay with the Blackwells or the Hopper. Can you give us any of those right now?
Really depends on the customer and the kind of workload that they have. And you're completely correct in the way you described it. There's still a large number of customers that are very satisfied with the older generation of chips. As a matter of fact, there's a number that say, hey, any Hoppers come available, here's my number. And you can actually see it in the pricing dynamics. Hopper prices aren't dropping. And in some cases, they've been going up. So it's interesting, you look at these customers and you wonder, are they going to evolve? And some of them aren't. They're fine with the capabilities they have from the chips. Others, they're actually running multiple types of chips for different workloads that they have within their requirements. So they hold on to the previous generation as they move on to the next generation. They use it for other things than maybe the most advanced model making or the highest scale inferencing.
Other than price, what are the other levers that customers will try to talk to you about when it comes to the negotiations and their considerations for which chip to use?
Well, the sort of rudimentary commercial terms are price, duration of the contract, and the amount of cash up front. So those are factors that we consider when we're looking at the transactions. We also look at the kind of customer. If the customer is a startup that's just raised their first seed round, they represent a different degree of risk than, say, a AAA credit enterprise. So the demands that we may have in terms of terms might vary slightly based on the kind of customer that's there.
Right. And bringing it back then to Vera Rubin's, I mean, we reported at The Information on some of the challenges that the Blackwell had in terms of implementation. And we should note that we noted this in the story. I mean, this is a scale of rollout that has never been seen before. And so in some ways, it'd be crazy to think that there wouldn't be challenges with implementation. But I wonder how you are thinking about the lessons from the Blackwell implementation that you are then applying to the Vera Rubin rollout.
Well, first of all, the reality is that every chip generation has some degree of challenges associated with the implementation, and it differs based on each of the generations. What we're understanding, and this is preliminary, is that the architectural shift is not as dramatic as the Blackwell shift was. So our hopes, and I know hopes are not a plan, but our hopes are that we're not going to experience the same degree of challenges. But that said, we're making sure that we're getting our most important customers early access so they can touch them and have experience with them. Likewise, if that's not possible, then we're talking to customers about POCs once we actually get production chips available for customers. And it's likely that many customers that have had, say, a previous experience, they're going to be a little more cautious. They might be asking for, ultimately test validation before they implement for their commercial term.
Hmm. The other class of chips I wanted to ask you about are not GPUs, but CPUs. So we are in the era of a memory chip shortage. And I wonder how that has affected your conversations with customers and what they are asking of you.
Well, so memory chips different than CPUs, but I'll address both.
It was my apology. Yeah, memory chip. Well, let's stick with CPUs, and then I want to get to memory chips afterwards.
Awesome. I'm happy to answer about both. Um, it's interesting. In the last couple of quarters, we've seen a pretty significant increase in requests for more CPUs, um, especially with the reinforcement learning and large scale inferencing and some of the agentic requirements that people have. Having CPUs near the GPUs is critical in order to be able to service the workloads. And in some cases, the requirements are a high multiple of the GPUs. As a matter of fact, Nvidia has Vera CPUs coming out, and so we're looking forward to seeing how those ultimately perform in the market. The obvious benefit being that the bundling with the Vera Rubins will be an interesting combination to potentially address some of these workloads.
Who is your dominant CPU vendor right now, though?
I believe are mostly AMDs, but
Okay.
I can't say for certain. My apologies. I should know better.
No, but I mean, this was the question is, as the agentic workloads increase, and we're seeing that CPUs are becoming much more important to that story. And given that NVIDIA has their own CPU offering, do you see them dominating more share, I guess, in the CPU space, even in your own workloads?
Oh, we're already looking forward to the Vera CPUs and having conversations with NVIDIA about getting our hands on them for test purposes and getting them to customers as well. Um, there's going to be obvious benefit to NVIDIA's bundled capabilities. So we're looking forward to seeing if there's going to be a significant performance improvement or some kind of overall TCO benefit that our customers can rely upon.
Right. Okay. And now let's go to memory chips. How is the memory chip shortage affecting your discussions?
Well, it's obviously an impact of COGS, cost of goods sold. So prices are going up, and we are reflecting that in the pricing that we're bringing to market. And there's also, at the same time, a desire to get more memory. I mean, this is not too different than the CPU conversation we just had. Customers are loading more data that they want to have near adjacent or adjacent to the GPUs to be able to take on these more larger and larger parameter models or more and more agentic workloads. So the price is going up and the demand for more is taking place at the same time. So ultimately, cost of goods will affect price. Price will, move. I'd say, if I had to be really honest, the pricing dynamic is more heavily driven by supply and demand right now. Just the fact that there's so much more demand than supply,
Right.
we're probably increasing prices more because of that than just the cost of goods sold.
And so to that point, I mean, the most recent quarter that Nebius reported 684% revenue growth. It is certainly a rocket ship and a good time to be the CRO of the company. But I think everyone is understanding that this is a moment, and the you can't always grow 684% every quarter. Although I'm sure it's what you hope for. Um, Take me inside sort of your playbook here. How are you structuring your team and your offering to account for the fact that it's not always going to be 684%, but we have to keep our offering sticky in some cases?
Well, so let's start with the offering, and then I'll talk about the go-to-market. On the offering side, we've been expanding our capabilities so that we're delivering more and more of the functionality AI builders need. The earlier experiences that we've had in the market, we've been able to win the model builders with the tools that we provide them for model creation and model fine-tuning. We've augmented and added to that our token factory inferencing solution. So as people put models into production and they want to commercialize them, they can use Token Factory to do that.
So this is the software around the. This is not just data center space. It's software.
It's software. And it's software that ultimately relies on data center capabilities. But the point being that as you look at the market, we want to be diversifying into more workloads per customer. This is cross-selling at the end of the day.
Right.
So when a model builder is taking their model to market, we want to be able to take on, and help them with their commercial requirements. And you could think of it, the evolution of the market has gone from models to inferencing, and next is agentic. And so we're building out a full set of capabilities to deal with each of those. Most recently in the agentic space, we acquired Tavali, which is an agentic search solution that is very popular with developers that are needing to have that API access to the internet for search and access to data, APIs, and other agents.
Right. And then what about the go-to-market team side of the equation?
100%. Thank you for bringing that back up. So we've been expanding our coverage of the market. Today, we have now teams in the Americas and EMEA, and we just stood up a team this past quarter in APJ, in Asia Pacific and Japan. So reaching more of the geographic market. We're also remaining extremely committed to the AI native portion of the market. That's been a very successful market segment for us and one that we have a right to win. But we're also making investments in the rest of the market where we believe as the market may cool down, in the foreseeable future, we think that software vendors and enterprises are going to represent the lion's share of opportunity. We're making investments now so that we can meet that demand as it matures. So building a go-to-market engine to be able to know who the main enterprise customer opportunities are, being able to target specific workloads and win the lighthouse accounts, establish credibility, and establish trust in the category so that as the market starts to heat up, we'll be able to continue to grow at a better than market growth rate. Maybe not 684% like you suggested, but I'm going to continue to aim for it.
Great. Well, I look forward to speaking with you more as we get more and more quarterly results in the months to come. Marc, always a pleasure. Thank you for coming on. That is Marc Boroditsky, the CRO at Nebius here on TITV. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, on our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media on X, Instagram, and TikTok, and LinkedIn. I'm already excited for our next show tomorrow, but I am even more excited for the New York Knicks to take, hopefully, a 3-1 lead tonight. They are in New York City. Fingers crossed. Have a great rest of your Wednesday. We'll see you tomorrow. Bye-bye for now.